So in this video, I want to talk to you about something that we all go through and we're all going to need to recover from at one point or another if we trade long enough. And that is a losing streak and trading losses. They are just something that you cannot prevent. So even if you are the most successful trader in the whole entire world, you're going to go through a point in time or a phase in time where you are going to take on losses, and you're going to need to know how to come out of that, and essentially how to go on to hit new high watermarks in your account. Because most people, okay, what I find is, and especially new traders, most people, when they come to these markets, they're fine whilst they're making money. But as soon as they get to that point where, they go through a losing streak and they start to get a bit of a drawdown in their account, they sort of never recover from that. And the reason for that is that, first of all, they lose their confidence. So whereas when they first come to the markets, they think everything's going to be easy, and they think that it's really, really simple. And, actually, it is quite simple. Trading is not that difficult to make money if you have a good strategy and you've got the right mindset. But as soon as somebody goes through a losing streak, then they lose all of that confidence that they initially have. And unfortunately, confidence is something that you need in trading to be able to be successful. And because they lose the confidence, they end up not taking trades that they should take, and they just keep digging themselves a bigger and bigger hole that they need to climb out of. So in this video here, I want to talk to you about how you can go about climbing out of that hole. So some of the techniques and the approaches that you can use to really to gain your confidence back, and then to take your account onto new high watermarks. But before we get into it, please make sure that you are subscribed to the channel. So if you're not already, please hit that subscribe button and then hit the bell so that you get a notification as and when I release a new video. Okay, so let's talk about this. Let's talk about how is it that you can overcome losses, because we're all going to face losses at one time or another. It's something that, as sure as the sun is going to come up tomorrow, you are going to hit a losing streak, whether you're trading the financial markets, whether you're trading the football markets, or even if you're just, betting, if you're a professional gambler and you're, betting on horses or whatever it is, you're going to hit a losing streak, and you're going to need to know how to get out of it. So the first thing that I teach people to do is essentially to just take a little bit of a step back from your trading. Now, it sounds counterintuitive. If you have an edge, if you've got something where you can find value, then you should just keep taking the next trade and the next trade and the next trade. But if you're in this cycle of destruction where you're just making bad trading decisions, sometimes the best thing that you can do is literally just take a little bit of a step back from your trading. Whether that be a day, a few days, or a week, just take a step away from your trading. Don't even look at the charts. Don't think about the markets. Okay, and just take a bit of time for yourself so that you aren't putting that pressure and that stress on yourself. Now, once you've done that, when you come back to your trading, you then need to make a decision. And this one's going to be quite a tough one. If you are trading too large to start with, okay, so let's say that your account you've got a £10,000 account and you were taking £500 or £1,000 risk per trade. Well, that's too much, all right? So the first thing you would need to do there is that you need to accept that you need to trade a smaller size. Now, and we're not talking about trading a size that's too small that you don't care about. It still needs to mean something to you, but it can't be a size that, it prevents you from getting into a trade because you're scared of losing the money. And personally, for my accounts, I trade at around 0.5%, so 0.5% of my total account balance. But other people may be more comfortable looking at a 1% or a 2% or something like that. But try not to venture too far over 2% or 3%, and certainly not to 5 or 10%. That's just too much. So when you come back to your trading, make sure that you do take, you look at how much you're risking, and you make sure that you're taking the right amount of risk. Now, what you don't want to do is, let's say that you were trading at a 0.5%, which is quite small. I don't want you to sit there and just take trades that are so small that you really just don't care about the trades that you're taking, all right? If you need to go smaller to allow you to gain some of your confidence back, that's absolutely fine, but you need to make sure that the money that you're putting to work in the market, that you do care about, all right? And I'm not saying that you care about it as in it's going to pay, your car payment or something like that. I'm just saying that it can't be, if you've got a £10,000 account and you're risking, a pound on a trade, for example, that's ridiculous, right? That risk is way, way, way too small. You might as well be in a demo account. All right. But if you're saying, you might take a 10 or 20 pounds, you're looking at, or 20 pounds, you're looking at, 0.1 or 0.2% for a trade, just to kind of get your confidence back, then that is absolutely fine. You can do that. All right. But you need to, so when you come back to your trading, you need to find, risk parameters that would allow you to get back into the game and do it unemotionally, so that you're not sat there taking bad decisions. The second thing that you have to do is you need to make sure that you've left all of the previous losing streak behind you. You cannot carry that into your next trade, because if you do that, inevitably what you're going to be doing is you're going to be making decisions to allow you to make the money back that you just lost. And you can't ever do that. When you're trading in the markets, you have to think about just taking the next trade and the next trade and the next trade. And you can't connect two trades together. So you can't say, I've lost this trade, or I've lost this series of trades, so the next trade that I'm going to take, I'm going to try and make back 50% of what I've lost. It doesn't work like that. You have to just be consistent in saying that if I get the right criteria, if I get the right conditions for the trade, I'm going to take it. All right. And I'm going to take it with the right amount of size, with the right profit target. So everything that meets the criteria of my system. I can't automatically start to take a larger trade size, or I can't push my profit target out even further than it is. So let's say, for example, I've got a 50 pip profit target, but I want to make some of my money back. So I'm now going to make it 100 pips. It doesn't work like that. And you're almost, you'll pretty much lose all of your money doing that. So if you were to extend your profit target from 50 to 100 pips, you're messing with the strategy. You're messing with the system and the rules that hopefully you've tested. All right. So you need to make sure that you just take the next trade and the next trade and the next trade, and you completely forget about the losing streak that you've just gone through. And then finally, what I advise my clients, my customers to do is to trade in batches of trades. And this sounds weird, but let me try and explain it for a minute. So instead of saying that I'm going to look at my account balance after each trade, what you'll do instead is you'll say, I'm going to commit to taking the next 10 trades, regardless of whether one is a winner or a loser. I'm just going to take the next 10 trades. And then at the end of the 10 trades, I'll look back and I'll look at my trading performance, look at any mistakes that I might have made and try and tweak those. And then I'll take the next 10 trades. And then I'll take the next 10 trades, because you cannot ever, all right, judge your trading or determine whether you're successful or not based on the outcome of just one trade. It's impossible to do, because one trade, it's whether you win or you lose, is completely, it's random. Okay, which sounds weird if you've got a strategy and it's got an edge, because you'd say, well, I have an edge, so I know that 70% of the time I'm going to make money. Yes, but over a large sample size of trades. One trade in isolation is completely random. If you win or if you lose, it's got nothing to do with your strategy. It's just completely lucky. It's only when you take a large sample size of trades that actually you'll start to see your edge play out. So you have to commit to trading in batches. And once you've done that, okay, and once you start trading in batches and you start seeing some results come back to you and you start getting a little bit more confidence, then if you did decide to reduce your risk size so that you could get confidence, then you can start to raise it again, not to ridiculous levels, all right? So again, the maximum you really want to be risking is, 2, maybe 3% if you've got a really aggressive attitude towards risk. But I much prefer to be trading around the sort of, as I said, 0.5% to 1% level. It just allows me that peace of mind that, no one losing streak or even series of losing streaks is going to do anything too negative to my account. Because whilst we have our account balance, we also have, so we've got our monetary capital, we've also got something called mental capital, which I'll talk about in a different video, but it's something that we have to protect both of these. So we have to get that balance, all right, between the risk that we're taking and the profits that we want to make. But again, we'll talk about that in a different video. All right, so just to recap, if you want to come out of your losing streak, you need to do a few things. First of all, you need to make sure that you get the right amount of risk. okay? Or actually before that, you need to take a step away. So you take a step away from your trading. Then when you come back to it, you assess your risk parameters to make sure that they're within the right sort of area to allow you to make money, but not take excessive risk on a trade, and make sure that you aren't acting emotionally in your trading. And then once you've done that, you then want to look at trading in batch sizes and making sure that you've left the losing streak behind you. It's so very important. You cannot take the losing streak or any previous losing trades into your next trade. So, one trade has nothing to do with the other. And you have to get that through your mind, because the moment that you start trading, trying to make the money back that you've lost, you're going to make more. You're going to dig yourself a deeper hole, and then it's going to be almost impossible to come out of. All right. So please take what I'm saying, and really internalize it, because I promise you it's going to help you in the long run. All right. So I hope you enjoyed this video. If you have any questions, please feel free to post it beneath the video here. Otherwise, if you haven't subscribed to the channel, please make sure that you hit that subscribe button, hit the bell so that you get a notification. And whilst you're at it, smash that thumbs up, give me a like, and I will see you in the next video. Take care now.